Let's start with euro dollar, as most of the people are trading euro dollar. Overall, in the last couple of weeks, we have had amazing movement on euro dollar. When I was commenting that we should be aiming to buy a euro at 1.077 zone, people were thinking that I was joking. Nonetheless, we had still the 1.17 levels tested last week because of the Chinese turbulence. Today's NFP is going to be very, very important for the fact that it will be an outlook of the US economy, and it will also be a key performance indicator, a KPI for the Fed to decide or to share their upcoming view about the rate hikes. I believe that the Fed will not be hiking interest rates, and it's just they're bluffing. Nonetheless, for today's and overall this week's market outlook, we can see that the pair bounced off the 110% Fibonacci retracement zone at 1.1560 level, and it has touched so far 61.8% Fibonacci retracement zone, which was at 1.11 level more or less. And now we are looking for the actual movement. If we are looking at the indicators on weekly time frame perspective, we can see that both of our moving averages are sloping down, and it appears that the 5-week moving average tries to be a dynamic support level. We'll see if it holds or not. On the other hand, RSI has gone previously above the 50 zone. Now it's testing the 50 level. MACD is indicating potential bullishness for the fact that MACD signal line, which is this red line, is below the MACD bars, and it's possible that we would possibly see some kind of bullish movement because of these two indicators. So we have clash of bearishness from moving averages and bullishness from MACD and RSI. Moving on to daily time frame, the pair yesterday tested the 50 moving average. It is below the 200 moving average. It is making a moving average sandwich. It's a sideways development, so therefore we are looking for a breakout or break above, break below on either side, either on the 50 moving average or 200 moving average. And we also have this trend line, which shows that we have a major support at the 1.10 level. So 1.10 level support, we have another trend line which shows the resistance as well, 1.13. So we are looking at the support resistance level and market movement between 1.10 and 1.13 level for now. On the other hand, although we have the bullish divergence on RSI, RSI is going below the 50 zone on daily time frame. MACD is signaling bearishness as the signal line is above the MACD bars, and we have the daily resistance level just above the current price at 1.1150 level. Let's move on to 1 hour time frame. On hourly time frame, we have a little different perspective. We can see that the pair yesterday, after the ECB president's commentary about the ELAs, we saw the euro depreciating against US dollar, and nonetheless we have had over 100 pips movement in a couple of hours yesterday. So we are therefore looking for potential bullish correction so far for now. My expectation is that no matter what happens, we would see the pair to go and test the 1.1180 zone, and from there on we will see it based on the market movement what's happening. I'm gonna be a little unorthodox today compared to my other analysis that I'm sharing in general. I'll go on 15-minute time frame and share a little extra outlook here, which is a breakout outlook that you can take into consideration if you would like. On 15 minutes, we can see that we have a little bullish divergence over here on RSI, okay, and we also have the MACD above the zero line, although MACD signal line is above the signal MACD bars, and we have one moving average showing down, which is the 200 moving average, and 50 moving average is showing upward so far. So what we would be expecting is that if the NFP comes below the expectation, below the consensus, go short below the 1.1125 zone, that would be more or less expectable. And if we have above the 220 zone, we would possibly expect to see the pair to bounce up, and therefore we would expect to see potential buy opportunities for the pair at 1.1190 level and upwards. We would, in that condition, aim to see the pair moving all the way up to 1.13 level. Moving to GBP USD, at the moment we are expecting a hit on the lower boundary potentially, which is close to 1.50 psychological resistance, previous to support at the moment level. On weekly time frame, once again, MACD is above the zero line. Meanwhile, MACD signal line is showing that it's going above the MACD bars, which is a potential bearish signal. Meanwhile, the RSI has gone below the 50 neutral level, which is a potential bearish signal. Well, it's already bearish anyway. On daily time frame, MACD is below the zero line, MACD signal line is above the MACD bars. RSI has gone below the 30 level. It's showing signs of oversold levels. While we have the 200 moving average, which is downwards. Let's make this 50 so that we have a better outlook on the market. While 50 moving average is also showing downwards. So we have all our indicators showing that it is bearish. However, we have this trend line which I've combined basically the 9th of March 2015 to the low of the 1st of June 2015, and that line overall indicates that we have a support level at that level. If you are a harmonic trader, you could also see this level as a potential head and shoulder, reversed head and shoulder level, although it's not really highly confirmed one, let's call it this way. You can have it as the left shoulder head and right shoulder over here somewhere, and if that would be the case, we would see or we would expect the pair to make 900 pips or so bullish movement from this level on, and that would be somewhere over here at 1.61 level, which is kind of logical. Generally, historically, pound dollar tends to trade anyway between 1.50 and 1.66 level. So that's the historic average of the pound, and we have at this level 1.61 a major resistance as well. So it could be, if this level is confirmed, it could be a good entry point for us to take into consideration. Let's move on to hourly time frame to see what's really happening on intraday perspective. We can see that that trend line that I was talking about is holding very well over here. It has been already tested in the last 24 hours 3 times. First one being the 6 o'clock server time of Orbex trading platform. The second time today 10 a.m. trading platform, and finally the just an hour earlier 1 o'clock as well. So what we are looking at over here is that on RSI point of view, we have some kind of bullish divergence. Although the market is making lower lows and lower highs, we have the RSI making a higher high overall. The same or similarly on MACD as well. If we go just like this, we would see that the pair has also on RSI MACD perspective as well, it's showing signs of bullish divergence. It's just signs of bullish divergence. It's not confirmed yet, for the fact that both MACD is below the zero line and RSI itself is below the 50 level. Talking of it, we have the moving average showing bearish signals, as we have the 50 moving average below the 200 moving average. It's a bearish signal. So what we would be expecting is that in order to consider any kind of bullishness or bearishness, we need to see the pair to make a higher high. Our recent high was at 1.5325 level on Thursday, and we need to see a break above that high level to consider any bullishness. In that case, we would enter between the 250 moving average, which would sign that market would at least for a while trade between the 200 moving average and 50 moving average in a range of 150 pips movement. Again, I'll go on 15-minute time frame just to see what's really happening. On 15-minute time frame, very similarly to what we are saying, we can see that we have the previous high over here, but we also get to be seeing that there is a immediate resistance at 1.5290 level, right above the 200 moving average on 15-minute time frame. Also, we see another divergence on MACD and RSI over here, and it tells us that we can expect either break above of the 1.5290 level to enter or to aim bullish entries, or if we have major above 225,000 NFP figure, we would see the pair plunging below the weekly support level over here as the trend line that we had driven previously. And in that case, we would be aiming to see in the coming weeks 1.50 level. Okay, now let's move to USD Japanese Yen. Historically, for your information, USD Japanese Yen is the biggest actor for NFP figures. During the NFP figures, this pair tends to move the most compared to any other USD pair that we have. Okay, so therefore, I would highly recommend you to have a look on this pair. But bear in mind that on weekly time frame, the pair has found itself a support right on 50-week moving average at 1.19 level. And it's also very close to my 110% Fibonacci retracement zone. It's just a couple of pips, well, only 20 pips different. Furthermore, this level itself is also historic 35 weeks support level. In the last 35 weeks, this level has acted as a major support or a resistance level before we saw any kind of major movement. So if you are aiming to see any kind of bearish outlook, as NFP figures generally tend to move the pair, USD Japanese Yen pair, more than 150 pips, you would be expecting to see a break below the 1.1850 level, and you could take in a short position from there on and aim to see 1.16 level in the coming days. That being said, let's move on to daily time frame. On daily time frame, we can see that the pair is below all the moving averages. The 5-day moving average is acting right now at dynamic resistance level. MACD is below the 0 line. RSI is below the 50 level, just above the 30 line, and on daily time frame, RSI is showing bearish divergence, which is a sign of USD weakness. Moving on to hourly time frame, we can see that the pair is finding itself a nice support at the highlighted orange color level, which is our daily support. This is the support level. It's not the support line, it's a support level. It's 40 pips between 118.99 level to 118.56 level. So this level, we would expect it as a potential, well, correction level or bounce up level. So if we have positive news coming out of the NFP figures, we could expect the pair to just bounce off this level and all the way up, test once again the 120 zones, potentially 120, 2160 level. This orange dot line that you see is the previous day's lowest low, and potentially we could expect, if we have any kind of disappointment from NFP figures for the first minute or for the first couple of minutes, we could expect the pair just to test this level before bouncing below. On 15-minute time frame, again, we can see that the pair is below the 50 and 200 moving average and above the 5 moving average. 5-minute moving average is not really relevant on 15-minute time frame, so therefore we'll ignore this for now. RSI itself though is just below the 50 level. MACD is below the 0 line, however signal line is showing some kind of potential bullishness. It's some kind, it's not confirmed yet, it's not advised to go against the trend at this level. We have a bearish trend right now. So if you were to ask me where you should consider going long, if there is any potential opportunity out there, my recommendation would be look for the price break above the 50 moving average on 15-minute time frame and wait for the recent highest high, which is this level at 1.1955 level, to be broken above to confirm your entry, and then you can consider to go high. Before I go to gold, I just want to share one extra information with you. I'll go on Eurodollar and I'll just demonstrate it for you live as an example. In general, I follow the 50 moving average on 1-minute time frame during the NFP figures as well. Okay, so if we go back to yesterday ECB meeting, we can see that the pair generally tends to bounce off or find itself a direct resistance or crossover right after the news or meetings are taking place. So whenever you see such kind of movement, you can wait for 2 candles. Basically, you wait for 2 candles, and you need to make sure that those candles are closed. These candles will define the direction of the trend for you. Let's just imagine that this was the NFP figure yesterday. What you would have done is that you would have entered in the second candle over here with the trend, your stop loss being just above the recent highest high, and you would have followed the entry until you saw that any candlestick closed above the 50 moving average, which is my kind of brown moving average over here. This would have been my entry.